Hello and welcome to Wyckoff Training Academy. It's been a long time I have uploaded any recorded or uploaded any video. So today's like it's been like month or two I haven't uploaded any video. But in this video I'm going to discuss. First, let me set up my okay now it's completely set. Bismillahirrahmanirrahim. So in this video I'm going to speak and explain you how to use this top indicator, which is Quadris WTA Sharia trading system. So first thing first, what this system is, what is the main or what is the main logic behind creating the system? There might be some students of mine who might be watching this video, and there are certain students who have only bought the trading system, and there are certain students of mine who are planning to buy this system. So I hope this video explains uh, in in a fair way how and what this system has to offer to you, and why you should why what sort of or what kind of this would be the right word, what kind of like probability or what kind of additional information or additional insight about the market you would get out of this indicator. So first thing first, as we all know, this is a ribbon. Please, and my request to all the viewer, whoever is watching this video, please watch this video carefully, because this would change the way you trade. This would change the way you look towards market, because this simple system has a greater potential and a potential to degree where you can assess the market tops and bottoms. For that, I have specially this market level indicator, wherein turning levels, which gives us the market turning points. But based on this, also you can do the assessment. So what is the like? I'll start again. As you can see, there is a red, there is a green ribbon, there is a yellow color ribbon. So green stands for up move, prices are going upwards. Red stands for when prices are going downwards, and yellow stands for when the price is facing some sort of consolidation or price is going sideways. So in this example, we would be taking example of XAUSD gold spot versus US dollar. Exchange is ONDA. So we'll walk through this entire trading system and how we can apply it on different time frame. So to begin with, first thing first, what is the foundation? Foundation of what is the framework of this indicator? As you all know, I'm a Wyckoffian expert when it comes to Wyckoff, R.D. Wyckoff methodology, Richard D. Wyckoff methodology. So I'm into Richard D. Wyckoff methodology, and I'm practicing it from more than like 17 or 16 plus years, give or take. So whatever the core principle of Wyckoff are, like the one core principle is there is an accumulation zone, price is coming down, there would be some accumulation, then there would be, after this accumulation zone, there would be a markup phase, which is normally referred to uptrend. After going through this markup phase, market gets into a distribution phase, and then this is a distribution phase. After the distribution phase, falls down, which is referred as M MD, that means markdown, which is normally we refer to it as downtrend. And then this is a cycle. It will keep on repeating. Again, there would be a accumulation, then a rise, and so on. And there would be a distribution again, and then there would be a price fall. This would be markup phase, and this would be markdown phase. So this is the conceptual idea, and this is the framework wherein, based on which I have designed this entire trading system to make it very simpler. Like for example, if we are for any accumulation, if prices are coming down and we are going into an accumulation phase, what what are the typical things which we want to look into? And if prices are going upwards, that is a markup phase, which is we normally refer to it as uptrend. What are the characteristics and what are the things which we what are the key characteristics that we should be looking out for, so that we can say that this is a markup phase? If there is a distribution, what what should be the key characteristics for assessing a distribution? I'm not talking about schematic, because honestly speaking, uh, people might have been through my other videos also. um, Schematic is something which is unrealistic, and it cannot be applied on on a consistent basis. It doesn't mean that it doesn't work. It works, but it will not give you consistent trading opportunities. That is what I mean to say. So, being a Wyckoff trader since 16 years, I struggled a lot with schematic. So I came up with this solution, which is something which would give me a consistent trading opportunity, which would give me clarity of the market, whether it is going up or down, and more above all, what to look for, what to look for in any given opportunity. If prices are going to go downward, then what I should look for, and what I should look for, and how I should look. And if prices are going upwards, then what I should look for and what it should look like. These are the things which I have kept in my mind, and based on this basic basic framework, which was given by Richard D. Wyckoff: accumulation, markup, distribution, markdown. So if you only follow this thing, that is more than enough for us, because in this accumulation and distribution phase, demand is greater than supply. Then this is the resultant of that: higher prices. Here, supply is greater than demand, then this is the outcome, which is a downtrend or a markdown phase. So I hope this simple 2 minute, 3 minute explanation suffices the logic of Wyckoff. So here, what we are doing. First thing first, don't take this as a normal, any kind of a pullback system. Please, please, please. This this ribbon or this ribbon or either this ribbon, we are using it for only graphical representation, because, like for example, people might combine it and correlate it with moving averages or this and that. Moving average has its own calculation, but the graphical representation would be same, because for a graphical representation on any given chart, your basic calculation behind achieving your objective would be different, but the representation would be same. So on those notes, let's start. This is a ribbon which shows you an up move, and this is a downward move. And irrespective of any time frame, it will adjust it accordingly. As we all know, it has a self-adjustment property in it, right? So here you can see we are on a 4-hour chart. Price started rising from this particular point. Then And the pullback, which I was talking about, we don't consider this. We don't wait for this kind of pullbacks. And I'm not bother about, and I'm not. Uh, my intention is not behind making the system into this kind of pullback. Though we use this pullback, we trade based on this kind of pullback, or we can say we exit a trade based on this pullback. That keeping in mind what Wyckoff uh, market flow would look like based on that. Not on just we are getting a pullback, second pullback, third pullback, then after the pullback, price is going above and all this stuff. So this tool, what this tool is purely based on keeping in mind Wyckoff principles of demand and supply. So by now you might have understood that what I'm about to present to you is purely Wyckoff, and this tool is a must tool for every trader if he or she wants to make consistent profit. The reason behind saying this thing is because and much more uh, logical information about the price and volume flow in the market. Remember, Wyckoff, if you might have heard about Richard D. Wyckoff's work, his works, if I want to say it in few sentences or a few words, it is a study of supply and demand. And based on the study of supply and demand, how price reacts. And for assessing supply and demand, collaborating or clubbing price and volume. This is what in a nutshell would look like. This is the entire thing, or is this is the gist of what Wyckoff work is all about. Many tutors, many veteran traders, just like David Weiss, whom I admire a lot and from whom I learned a lot. So he or Gary and other traders and like Tom Williams and other great traders, they also adopted the Wyckoff method, but they have added their own understanding and learning and more based on their experience. So do I. I'm also adding based on my experience. So now, like without any further ado, what this system has to offer. The reason I kept the name Sharia. Sharia means we are only allowed to we would only looking out for buying opportunities. We don't look for short sell opportunities. This is the major difference. And there are many other things attached to this Sharia trading. So, what this particular tool has to offer, it comes with, as you can see, it shows price, Wyckoff price and volume pullback. You have three check box. One is Wyckoff price pullback, one is Wyckoff low volume pullback, Wyckoff high volume pullback. So now here no box is checked, so you won't get any. You would see by default the same. Okay, so would be plotted. But if I, for say, if I plot or if I check or if I select this Wyckoff price pullback, now you can see you're getting this red, 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 and red lines. So these red lines are showing us if price has made progress. The price pullback was this one. Then the price continuation. Then again you can see there is a price pullback. Then you can see price pullback pertaining to this one. Then you can see price pullback. So now the beauty of this system is as soon as the price pullback ends, this line, this red line, like the background is the ribbon color is green, and if price is progressing upwards, the pullback would be represented by red line. If the prices are falling and falling and falling, and they are approaching this particular line, a particular whatever particular ribbon, so you will see a consistent red line being drawn. If I zoom in, you would be able to see this is the red line which is consistently drawn. So now this shows us that now the price is collapsing and it is falling. Now, if this was the first pullback, second pullback, third pullback, fourth pullback. Now, what we have seen so far is just price pullback. Here we haven't added any element of volume into it. So consider it to be like this. This whole area is an accumulation zone. And this is the markup. So if this is an accumulation zone and this is a markup zone, what we are expecting, what Wyckoff has told us, in a markup phase, demand would be greater than supply, right? This is what we are expecting in a markup phase, which is normally referred to as uptrend. So in this particular price movement, what we are expecting, whatever the pullbacks are, the pullbacks should be of low volume, so that we can say there is a probability of price going upwards. So, but at first, what we are using only a pullback, price pullback. So price pullback in this case, it was over here. Even if it goes sideways, it will give you a price pullback over here also. Over here also, the price movement. This is a downward stride, and the price movement towards the upper side is shown by this green line above. Like this is the red ribbon, and the green line is showing us the pullback. And as soon as the pullback ends, after this candle, this was a sinking of price. So this gives you a clear indication, a clear idea whether the prices are, this is a pullback, this is a pullback, this is a pullback. And after every pullback, the resolve, if the pullback is in favor of price continuation, then there should be instant gratification of price, and price should go upwards in the form of this strong bars. So even it is up to you where you want to enter, but it will give you a fair idea now. The things are in my favor. If I have bought at this particular level at 2744, I'm talking about gold, XAUSD. So 2744, I can hold on for till the time I get an indication that prices are coming down. So now this is one thing. So this is purely based on price. So now let us see what it has to offer if I apply my Wyckoff low volume pullback. So what is the purpose of this low volume pullback? I've made many videos on this thing, but I feel like uh, I didn't get it. Like why people are not that much, or might be that people are not getting the true essence of this thing. This is the only thing which should give you the pure price and volume correlation. That too on the live market, on the instantaneous. So even if you're going sideways, or even if you're going upwards in uptrend, what of this particular day, because this was the exact day. So for example, what I've selected Wyckoff low volume pullback. In this Wyckoff low volume pullback, this is the initiation of price, then a pullback. Now you would say why there is no pullback over here, because I haven't selected price pullback. If I select price pullback along with it, then surely I would get a pullback level over here. But here I want you to see how low volume pullbacks help us in trading. As a Wyckoff trader, we always look for when price is moving upward with a greater commitment. That means demand is greater than supply. So that means supply should be less than demand. So how would we assess a supply is less than demand? We would assess supply is less than demand when there is a pullback with low volume. And after this low volume pullback, if we are able to go above this high, so I can place my limit order here and I can catch my trade. You're getting this point? I'm talking in terms of long. Now, if you people want to short sell, then it equally works well in a short selling opportunity. This was price movement was going downwards. This corresponds to this. This was a low volume pullback in a downward stride. This is a low volume pullback. As soon as price turned from this point, either you can place your sell order over here, short sell order, and place your stop loss on above this particular swing high, and this much of profit you would have made. Simple and straightforward. Then after that, we get another low volume pullback as we are going downwards. Then there is a continuation of price going downwards. But see here, it is continuously drawing green line. That means altogether we are getting low volume pullback, low volume pullback. That means in my training, in my mentoring session to with my students, I always tell them market has a tendency to move higher on low volume as well as market has a tendency to move higher or lower on high volume as well. So the low volume pullback, like there are many kind of pullback trading system out there in market. I don't have anything against any different other system, but if you if you want to follow Wyckoff, this is by far the best and most what you can say fastest way to analyze the market in terms of Wyckoff principle of demand and supply, which results in either markup or markdown. Just now I've completed the course of a mentoring session of few students. So this is the indicator which would change the way you look towards the market. Because here you are trying to observe whether the market is, if this is a selling move, I would love to see a low volume pullback. So when I get a low volume pullback, it gives me an opportunity that if price breaks this low, then I would want to be into, I want to get into a short selling trade. For example, same goes over here. This was an upward stride, straight starting from this particular point. This was the first pullback. And as soon as this pullback ends, I place my limit order over here. And this is my stop underneath over here. And here it goes. Straightforward, simple. No, this system is not for a moving average kind of a thing. Like if price is coming here and it is touching, and if I get a doji, if I get a two bar bottom reversal, or if I get a bullish engulfing candle, it is not like that. We don't believe in candles trading, candlestick or candle type trading. We believe in how price and volume is correlating, because that's the reason it will give you more accuracy and more productive trades. So we this entire day, or this entire day is choppy, but still in the choppy market, you got this opportunity which yield good profit, and after that you got this opportunity which yield good profit. So if one would have analyzed how much profit you would have made in these two particular trading opportunities, down till 700, 0.25%, limit order 0.16, 435. So it makes around like 10 points or 1,000 pips, whatever you do the calculation according to your broker. So this is how this system works, and it works very well. And the main beauty behind this system is it will make your trading task hell lot of easier, because Wyckoff is the only method wherein you can trade, and if you follow the proper rules and discipline, you would make consistent money on a consistent basis, irrespective of your trading forex, crypto, stocks, commodities, ETFs, CFDs, any damn good financial market. If it is fairly traded, definitely you will make money, no problem. But the point is, you should be able to understand. Now, here we are talking about continuation of trades. So, like for example, this is a very beautiful example. This was a downfall, then a pullback. Out of this pullback, only this 2 or 3 candles shows us there was a low volume pullback. What about this one? So if I add high volume feature, watch closely. We are talking in terms of this particular area. So what about this candles? Watch over here. Now I'm applying the third parameter of Wyckoff, that is high volume. So now, so what does that mean? Here it means initially there was a, we're going to say, a stopping volume kind of activity. Then later on, it resulted in a low volume pullback, but there is no whatsoever follow through towards the downward side. Again, we are getting a low volume pullback. Then at this particular point, this is wherein price started plummeting downwards. This is the last gut check, which in wherein we can say this is also an accumulation phase. I'll not get into accumulation because that is something a very detailed part, uh, which I normally deal in my classes. So once this factor has been established, this is last spring or what, and or spring after accumulation. So after that, you can see we got a pullback at this particular point, we got a pullback at this particular point, and we got a pullback at this particular point. So now the main meat and potato of uh, using this trading system is simple. It will give you, now I've applied high volume, Wyckoff high volume pullback. So now whenever if price is coming down, and if there is up, if prices are coming down, and like for example, we'll take example of this particular position. So now we know prices are going to turn from this particular point. Always remember, being a Wyckoff trader, and out of my 15, 16 years, 16 plus years of experience, buying will not come on a single price level. Rather, composite operator or smart money, they will start accumulating stocks or your currency or your particular instrument. So this was the first point. You can see this green line. This shows us a heavy volume pullback. Again, the trend is down. This is a pullback, and this is a heavy volume. Then market plummeted. After, you can make out the fall is like a knife fall or a sharp fall, and after that you can see there is price taking going upwards, then price coming downwards. There is no whatsoever high volume pullback, but here you can see there is a high volume pullback in this particular price level, which is somewhere corresponding to this particular level. You're getting the point how to analyze this. This yellow line is referring to this one, this green line referring to this one, and this minuscule, one second, let me zoom in, because I want you people to understand how it works when market is frenzy, and when it works, when market is friendly. If you correlate, if you draw a line, you would see the price band formation taking place over here. So that means this price area is something wherein there is heavy volume, or composite operator or smart money are trading on by using heavy volume. So if you are able to identify this kind of situation, that means by this point I was clear that now if it followed by any other kind of high volume, that too in the same vicinity would be very good. But after a after a high volume pullback, what is the resultant? Is the price showing us a steady downward progress or abrupt fall? If there is an abrupt fall or a knife fall, that means it is just a liquidity hand and stop loss hand of like normally stop loss and what like you people might be aware of it. So here it showed us that it is corresponding to this particular price area. Don't consider it as a candle, consider it as a price band. So after that, what happened? It falls down, and again it started moving upwards. So now, what is the main purpose of having a high volume or a low volume? High volume would give you, like for example, this was a upward stride, this was a high volume. By this point, I understood now either there is some sort of selling coming in, a supply coming in, but this supply was instantly eaten away by this thing. So it gives me an opportunity to place my buy stop order over here. If it goes above, then I know at least it will go 3 4 holds, and it went. And at the pinnacle of the or at the end of the trend, you can see this kind of thing. And if the continuation is towards the downward side, that means now we are about to see a deeper pullback, or it might lead to a complete trend change altogether. So this is a very wonderful, very excellent tool. You just see it whenever it happens, wherever it appears, especially a high volume. I normally tend, like, if you want to be a successful pullback trader, go for low volume. But if you want to see whether which side or at what price level, or like at where the tops and bottoms are going to be, you should use high volume, because this was a level where there was a high volume, again a high volume. As soon as we approached near this level, again we got a high volume pullback. And again we approached towards the same level, we got a high volume pullback. So this price band is something which is telling us that here suppliers or supply holds greater interest than demand. That's the reason we got fall. And what happened after that? The resolve, and the resolve is like, for example, here we got into this particular things. But see, initially this was high volume supply, but later on, was there any high volume supply taking place? No, there was only price coming back. And if you apply a low volume supply to it, then it will make things more clear to you. Like for example, if I apply low volume pullback, you might see something to be taking shape. This is a low volume pullback, uh, lower high volume, high volume, high volume, high volume. This was the price band, and we extended. This was a low volume. See, this was a low volume, this was a low volume. That means initially the pullback or the supply was heavy, but later on the supply got or lost its interest in selling the product downwards. So that's the reason we held this level, and then all of a sudden we got a price outburst. So this is it. I'll try to make another video. If anyone feels like, please comment below. This is a very wonderful tool. If you want to master Wyckoff method in a very simplified and logical manner without getting into more complex kind of thing, schematics and this and that, because Wyckoff works boils down to two things. Either demand is greater than supply, that means prices will rise. Either supply is greater than demand, prices will fall. Simple. If you adhere to this two principles, or if you understand the logic behind this, how the market operates based on these two entities, you nobody can stop you from making consistent money. And this tool I made especially for catering to uh, this particular simplified version of Wyckoff. So if you want, you can avail this thing. And if you want any further videos on this thing, then please do let me know. And good night and bye bye from my end.